Mortgage loans, key features you should know. Buying a house is one of the most exciting investments you can make in life. You're putting down roots and looking at a future of stability. You're making a commitment. This is a big deal. Chances are, you want to buy a home so you can stop putting your money into your landlord's pocket, and instead you can begin investing that monthly payment towards home ownership. Paying off your monthly mortgage loan is much more satisfying and rewarding than paying rent, because you are building equity. Unfortunately, before you dive in headfirst, you are going to have to learn how to navigate the complex subject of financing your home. This includes learning the fundamentals about mortgage rates, so you're not flying blind. Don't have the time or energy to do all that research? No worries. We've compiled a synopsis for you of the key points you'll need to understand before diving into the home financing wormhole. You need to be informed so you can make smart decisions. Now sit back, relax, and let's talk about the key features you should know about mortgage loans. If you enjoy videos on investments, insurance, finance, loans, and mortgages, you'll love following the Money Trace channel. You can support us by hitting the subscribe button and the bell icon to be notified when we release new videos. Please also hit the like button if you find this content helpful, so that YouTube will spread our message to more people. Creating a budget. First things first. When heading into a big decision like buying a home and getting a mortgage loan, you'll need to first consider a realistic budget. You need to create a budget to figure out what you can realistically afford to pay up front, and what you can budget out to invest each month. Experts recommend that you spend less than 43% of your income on monthly debts. You can use a mortgage calculator to calculate all the variables and determine what you can afford. Ideally, you want to offer a down payment of at least 20%. Be aware that you will end up paying more in the long run if you aren't able to meet this criteria. If you provide less than this on a conventional loan, you'll also end up needing to pay for private mortgage insurance, which adds 1% of your outstanding loan balance to each monthly payment. The better your credit, the better mortgage interest rate you'll be able to get, so start cleaning up and optimizing your credit report now. 30-year loan. A 30-year loan is the most common type of mortgage loan, but you could also pay it off within 10 years if you had the resources. Be aware that some lenders will charge you extra fees down the line if you do pay it off early. There are 3 basic financial commitments for you to consider when approaching a mortgage. The down payment, your monthly payments, and fees. The down payment is the upfront amount you deposit to secure your mortgage loan. The larger your initial payment, the lower your interest rate will be, the fewer fees you will pay, and the less money you will end up paying in the long run. The monthly payment is the amount needed to pay down the mortgage loan each month. This includes a payment on the principal and also on the interest. The fees are the assorted costs you have to pay upfront in order to acquire the loan. These fees are important to factor in when budgeting for your down payment. They include application fees, appraisal fees, closing costs, title search and insurance fees, and commissions to your real estate agent or broker. You can also reduce your monthly payments and the mortgage interest rate by paying upfront fees, called a mortgage points. 1 point is the equivalent of 1% of the overall cost of your mortgage loan, and generally lowers your interest rate by 0.125%. Points can be tax deductible, but they are generally only a good idea if you plan to live in the house for more than a decade. Here at Money Trace, we've already done the heavy lifting and researched the best mortgage lenders for you. You can click right now on the description link below and get the best quotes. Just don't forget to come back for more important tips. 2 types of loans. There are 2 types of loans you need to be aware of: a conventional loan and a government-backed loan. The conventional loan is backed by a private lender or a banking institution, and offer more flexibility if you meet their credit and income requirements. The government loan, obviously, is backed by the government and is for borrowers with a lower income, with lower credit scores. They allow you to pay less as a down payment, but they often end up being more expensive in the long run. This affects whether you will need a conforming or a non-conforming loan. Government-sponsored mortgage associations, Freddie Mac and Fannie may set loan limit guidelines. If you meet their guidelines, you can get a conforming loan. However, if you have poor credit, high debt, or a recent bankruptcy, you will need a non-conforming loan. Mortgage rates. The next step is to determine whether you want a fixed rate or an adjustable rate. Most mortgage loans have a fixed interest rate, which will remain the same over the course of the loan. This is a good loan to get if rates are low when you are applying. A second option is the adjustable interest rate, which will be more of a risk. This type of rate fluxes over time with the market. You will benefit if the market is low, but your interest rate will also increase when overall interest rates rise. The best option is usually to get a fixed rate mortgage loan, and then to keep an eye on refinance rates and consider refinancing your home if interest rates go down later. Someday, when you are over the age of 62, and you have lived in your house for decades, you can explore topics like reverse mortgages. In that circumstance, a homeowner who has a large amount of equity in their home can actually borrow against the value of their home and receive funds to live on in their golden years. There are so many reasons why it's wise for you to invest in a home, including your own future stability, many decades in the future. For now, let's get you out of the gate and taking those first steps towards complete independence from the renter's hamster wheel. We love to create animated videos to help people like you. Hit subscribe and the bell icon to follow the Money Trace channel. By becoming a part of the Money Trace community, you won't miss our latest videos. One last tip, we've selected 2 other videos that will expand your knowledge even more. Enjoy!